Eric Muather with Muather.com, September 21st, 2016. It's Federal Reserve announcement day in a couple of hours, about 2-3 hours to go before the announcement, and it looks like the market knows that there is some impending catalyst in terms of how the price and RSI are shaping up. If you take a look at the Dow Jones hourly chart here, and here I am using RSI setting of 26, just in case it looks a little bit different from yours. But what we see here is a wedge formation as we go into the decision in a couple of hours. And also you can see here that the RSI has been trading within a wedge over the last, let's call it 4-5 days. Well-defined wedge in both the price and the RSI. So definitely we can see here that short-term traders are waiting to see which way the market does take. In other words, a breakout would be bullish above the wedge, and also which would trigger a movement above the wedge on the RSI. And of course, consequently, we can see here that a breakdown below the wedge would be short-term bearish for the market, and also short-term break below the wedge for the hourly RSI would be bearish. But a word of caution: what happens in these types of situations, sometimes the first move can be fake. In other words, it would not surprise to watch that what might play out here is a fake move out of the wedge, only to be followed by a move, the true move being lower, or vice versa. We begin by a break of the wedge and then eventually move back above that true wedge. So what happens here is, over time, in the coming hours, we'll see the market either hold the wedge above it or fake and then take the true direction. So even though it seems like an easy strategy just to sit and wait for the wedge to resolve and then take the direction, sometimes a little bit of patience is needed, because as the wedge develops and plays out, sometimes the first move is a fake move. So you are better off giving it a couple of hours so you can see that the move outside of that wedge has held. In other words, you need a little bit of evidence of time above or below the wedge to confirm that yes, there is a new short-term trend. And so for now, what I would say is, instead of taking the immediate move either above or below the wedge, what we might do here, the best thing to do, is give it a couple of hours, maybe even into tomorrow, so that the true movement above or below the wedge can be confirmed in time. And that might be the direction to take, because out of this wedge, after this consolidation the last couple of days, the next swing trade is definitely within this wedge. Above it is bullish if it holds for a couple of hours. Below it is bearish if it holds for a couple of hours. Of course, we shall see how this plays out. And again, the market knows that it is waiting for some catalyst. Eric Muather with Muather.com. As always, just let's see how these things develop. Remember, it's the time also above or below the wedge that will determine the true direction, not just the initial move above or below the wedge. Peace and blessings. Riches, blessings, blessings. Riches, riches and blessings, blessings. Yeah! Ah!